Hey, my name's James Nicholson and welcome to my YouTube channel. I've finally got some good news for you. In the comments this year, I've seen a lot of comments saying, is it all just going to be bad news? Well, it has been recently, to be fair, but this video is all about a lender, or two lenders to be more specific, that are cutting rates. We've also got some ideas on where other lenders are going to end up with their rates. And we're going to talk about the Bank of England, which is expected to cut rates later this week as well. So we're going to go into detail on all of that. If you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 37,000 subscribers now. We had 4,000 in just January. I'd like to get as close to that as we can in February. And let's make people aware that there is actually some good news in the markets at the moment. And how do we get more people aware of this video? Easy. Smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm and that helps more views on the channel. So, what is going on? Well, it's good to finally have some more positive news because it has been really tough for a lot of people over the last few months. Last year, we started the year with fairly high interest rates. The market slowed down dramatically. 2023 was really slow. 2024 started slowly. And so by summer, the markets wanted to get money moving again because they make money on lending money to you. So they cut their own mortgage rates. And eventually the Bank of England got round to cutting rates a couple of times last year as well. And so things started moving in the right direction. Then we had a change of government in the UK. They did a budget that didn't go down very well. Big employers are saying they're going to make redundancies due to the fact that national insurance went up, minimum wage went up, business rates went up for some companies as well, and the economy doesn't look particularly strong. Now we've got Donald Trump in power in America, threatening trade wars and tariffs on everybody. This gave so much uncertainty to markets, and that isn't what they like. So since December, in January in particular, mortgage rates went up off the back of that. Now we're at a point where the economy isn't looking particularly strong in the UK. Somehow we've avoided a recession, but we're very close to one. And that outlook means that now the Bank of England is having to look at two things here. Unemployment is rising, isn't great, but we've also got inflation that is stubbornly stuck at 2.5% as well. So they've now got to have a fine balancing act in keeping employment as high as they can while trying to reduce inflation as well. So the Bank of England this week is expected to finally cut rates for the first time in 2025. We currently sit at 4.75% as a base rate, and we're expecting it to drop to 4.5%. I think that's going to happen. And the reason I think that's going to happen is if it wasn't, and the Bank of England really didn't think that was going to happen, they would be in interviews. They're always, the Bank of England Monetary Policy Committee, they're always in various different interviews, maybe at seminars or on Bloomberg or places like that, or in the Financial Times. They always would kind of hint towards the fact that this rate cut wasn't going to happen so the markets could adjust. The markets are strongly predicting, nearly 90% now, that we will have a rate cut on Thursday, and the Bank of England isn't talking about it. They're silent on it. So that is meaning it's very likely that that is going to happen, and that's good. So because of that, something called the Sonia swap rate. The Sonia swap rate, that is what banks borrow at. And the Sonia swap rate, if you borrow from NatWest or you borrow from Barclays, they borrow from a bigger bank, and the rate that they get has reduced over the last few weeks based on the fact that the Bank of England is likely to cut rates. So how much has it gone down by? That's important to know. Well, the 5-year Sonia swap rate has gone from 4.12% down to 3.92%. So that's moving in the right direction. How about the 2-year swap rate? Well, that's gone from 4.26% all the way down to 4.06%. So nearly 0.25% drop there. And that means that lenders now have more margin and the ability to drop if they want more business, which they are. So who has dropped rate, you ask? Barclays has so far. Now, Barclays have got 2 options here that they've cut rates on. One is a 5-year deal. You'll have to speak to a broker to get more details on this. These deals are expected to go live by the end of the week. So I'm going to share the information that we've got, and you can go and do your research and see if this is an option for you. Now, the first deal is their 5-year deal. They're dropping to 4.13%. So moving below, close to getting below that 4%. Here's the downside on that deal. You've got to have an EPC, Energy Performance Certificate, of A or B. A or B. So these are green deals. Some lenders are doing this. And the reason they're doing this is because they are worried about the government potentially forcing, particularly landlords, to get energy performance certificates up to level C, or they won't be able to rent. So that's a risk if you're a lender, isn't it? Of course it is. So they want to make sure that they get a bunch of people that have got A's and B's on their books to mitigate that risk. What else have they got here? They've got a 2-year tracker that would be a good option for those that feel rates are going to drop. And they are. A lot of people think that rate cuts now will be 4 times this year. It changes all the time. It was 3 the other day. Some big lenders are saying that they feel like it could be 4 or 5 cuts. The tracker rate, though, is pretty good, and that starts at 5.24%. And there are no fees on it. So that's good. Now, with trackers as well, you can normally exit those deals quite easily as well. So that's a good option. Someone else to go and have a look at is Coventry Building Society. And so Coventry have put a press release out. You need to go and see what the rates end up at, but they're saying they're going to cut on most of their products over 0.25% on their rates. And they've been quite competitive. When we do the roundup videos on which lenders should you be looking at, that is something that is always coming up, is Coventry Building Society. So maybe you consider the tracker. That could be a good option if you don't want fees. You've also got the opportunity there. That is about 0.5% above the base rate. So yeah, if rates do go down to 4.5%, that will drop pretty much straight away to just under 5%. If it goes down again, it could get even cheaper. So that could be a good option for you here. The fact is that the Sonia rate drop, that's important. And that means that now, finally, after a glut of bad news for mortgage lenders, we could start seeing other lenders getting competitive, especially as we do expect the market to slow down. We've got quite a lot of activity, lots of transactions are going through at the moment in order to get those deals done before the stamp duty increases. But new deals, new applications that are happening right now are slowing down because people understand they can't get the deal done, or it's unlikely or tough to get that deal done before the stamp duty increases on April the 1st. So what do you think about that? You always say I give you bad news. I'm giving you some good news. I'm expecting to give you some more good news on Thursday as well with the Bank of England cut. So if you're on a tracker, especially if you look at this 2-year deal, you'd get the deal and you'd get a cut pretty much straight away if that happens. Do let me know if you've seen any other lenders that have cut rates so far this week. Do smash like, do subscribe, and check out all the other content on my channel, including this video right here.